How the super rich avoid paying taxes. We don't pay taxes. Only the little people pay taxes. The billionaire hotelier Leon Hamsey was once quoted saying, "Welcome, money finders. Please subscribe, share, and like this video. Do you know there is a country that has more registered companies than people? Stay tuned to the end to find out." Do you remember when you got your first paycheck from your very first job? Were you shocked to see your net take pay home? It is rumored that some of the wealthiest people manage to pay less in taxes than some of the employees. These wealthy individuals often go out of their way to hide their assets from scrutiny, sometimes from the public and sometimes from their own government. Billionaire Warren Buffett has reportedly pointed out the disparity, advocating that rich Americans pay higher taxes. To make that argument, he famously noted that he pays fewer taxes on a percentage basis than his secretary and other employees, since a bulk of his wealth is in stock rather than wage income. The point is that wealthy are able to avoid taxes through legal process. Most of the super rich use superior understanding of the tax laws to take advantage of all the legal methods available to reduce their taxes. Here are the 10 most common strategies on their radar. Number 10. Charitable investments. Giving money to non-profit organizations has long been a way for the wealthy to get a deduction on their taxes. You can donate up to $100,000 direct to the charity, but you can also donate to a charity saving account. This money can be deposited into the account and act as an immediate tax write-off even if they haven't been distributed yet. Number 9. Financial gift giving. Gifts are tax-free too, so another technique is to create what's known as an inheritance trust or a granny trust. So sometimes people will hide money by giving a portion of it to their children or other family members or trusted friends for whom the tax burden wouldn't be as great. Number 8. Equity swaps. An equity swap is another shady method of tax evasion. It's an agreement that allows two parties to exchange the gain and loss assets without actually transferring ownership. The swap avoids transaction costs and typically local tax on individuals. This is obviously a sneaky bonus for people who want to avoid high taxes in a particular area while still getting the benefits of owning assets in another. 7. Capital gains management. Capital gains tax automatically kicks in form of the sale of a certain valuable properties, e.g. shares, and act as a deterrent on investors cashing them in. A number of wealthy people are interested in avoiding this and have found legal loopholes to allow them to do so. Wealthy people borrow from an investment bank with the share as collateral after purchasing options which set their price at a fixed rate. This allows the borrower to avoid triggering the capital gains tax that will come with actually having the money at hand, while giving them free cash and allowing them to repay the loan either by handing over the shares or profits after sale. 6. Shell companies. Shell companies are a type of company that only exists on paper, allowing the person who uses it to funnel money through it and avoid paying taxes. Has a legal existence but typically provides few or no actual products or services. Often used to buying and selling to avoid reporting international operations conducted and avoid taxes on the profits. Shell companies also used to conduct various other pieces of shady business, including selling supermarket brand goods without impacting the value of them main brand. Tech corporation in one country might control a trust in another country that has a bank account in yet another country. 5. Invest in municipal bonds. It may sound controversial that you can protect money from being taxed by the IRS by giving it to the government. But a municipal bond essentially means lending money to a state or local government for a set of number of interest payments over a predetermined period. Municipal bonds issued by local government and state can serve as an effective tax shelter and are a popular way to earn tax-free income. These bonds are generally safe investments with interest rates that exceed those paid by ordinary savings accounts. Municipal bonds are exempt from the federal taxes and may be tax exempt at the state or local government as well, depending on where you live. Although municipal bonds are popular with wealthy people, they are also available in ordinary taxpayers. Number 4. Incorporating. The superwealthy are adept at keeping their taxable income and applicable tax rate as low as possible. In legal terms, there are many advantages to being a company and a few to being an earner in the top tax bracket. Rich people have incorporated in themselves in order to avoid various forms of tax. For example, by channeling your wages into a nominal corporation, you are able to pay yourself a small interest-free wage claim expense and reduce income tax. Once you reach super wealthy status, it is possible to tax a significant portion of your income in dividends and receive a small portion in traditional income tax at normal rates. Number 3. Retirement funds. The wealthy often soak money away into tax-protected accounts like IRA and health savings account. While not a technique exclusive to the very rich, squirreling away as much money as possible in a retirement fund is an effective tax shelter. If you go with Roth IRA, any earnings made from investments won't be taxed. Number 2. Life insurance. This is an especially clever use of borrowing against an asset. In this case, the asset being a life insurance policy. Similar to a Roth, IRA taxes have to be paid on money prior to going into a life insurance policy. But once the money is in the policy as part of the cash value, it's a tax-free provided the policy is structured correctly. A person takes out a policy with a large cash dividend, e.g. 1 million. This gives the individual involved a lot of leverage when it comes to borrowing, since most banks will lend up to 90% of the surrender value of the policy. And because this sum isn't income, it isn't eligible for income tax or capital gain tax. If you want to be an instant wealth or just add to your considerable fortune, this may be the right kind of tax evasion scheme for you. 1. Tax havens. One of the most notorious ways people hide money to avoid taxes is by opening offshore accounts. Tax havens are places where super wealthy individuals keep money in offshore accounts for reasons that include, among other, tax avoidance. These individuals often hold money within shell companies and anomalous entities. Top tax havens in the world: Bermuda, Cayman Island, Netherlands, Singapore, and Switzerland. Top companies that benefit from tax havens are Apple, Nike, Goldman Sachs. Tax evasion through offshore havens occurs on a huge scale. One of the most prolific offenders is the Cayman Island, which is home to more than 85,000 companies, making it one of the few territories with more registered organizations than people. Would you like us to do a video on specific tax havens? Please drop us a comment down below. We'll be glad to share with you. If tax haven strategies are available, why wouldn't you take the opportunity to pay less than taxman and bring home more? Thank you for watching this video. If you haven't subscribed, please do yourself a favor and subscribe. Hit the notification button, like and share this video. Until next time, goodbye.